So commercial real estate has been in a state of flux for the past few years with a looming day of reckoning on the horizon. Now, my name is Rock Daniels. I'm the Bluegrass Realtor for all your real estate needs in Central Kentucky. Hit that subscribe button so that we can stay connected. Now, in the aftermath of the 2008 financial crisis, many commercial real estate loans were made with near zero interest rates. Now, this has resulted in a staggering $1.5 trillion of commercial real estate loans coming due in the next 3 years. Now, refinancing these loans today would result in higher interest rates and lower values. And with the current illiquid market, this presents a significant challenge for borrowers. Now, to avoid a free fall in value, lenders must work with borrowers to restructure these loans and invest in new equity. However, there is limited liquidity and transparency in the market, leading to concerns about how this is ever going to be achieved. Now, regional banks are particularly at risk, with approximately 80% of commercial real estate loans coming from this sector. Now, if regional banks are squeezed, there may not be sufficient funds available for loaning money for commercial real estate. Now, despite this, the private sector can work through this issue if given enough time. Now, this is not the first time the U.S. has faced such a crisis, with the savings and loan crisis in the early 1980s presenting a similar challenge. Now, by creating time and space, the private sector can invest the necessary equity into refinancing these loans. But this will not be possible if sales in the market continue to decline. Now, sales have dropped by 70% since the fourth quarter, with CMBS issuance down 86% from previous levels. Now, this illiquid market must be given time to recover, and sources of financing must be made available. Now, regional banks and mid-sized banks want to be assured that all depositors are insured by the government, but at what point will the government step in to prevent further distress? Now, to avoid a complete collapse of this market, it is essential to slow down the train wreck and cushion the impact of the looming crisis. Now, the private sector will invest if given the time and space to do so. Now, failure to act could result in the public sector bailout, as seen in the 1980s savings and loan crisis. Now, if no relief is provided, regional banks are going to be at risk, and municipalities could see a significant decline in real estate taxes. Now, small businesses relying on regional banks and the housing market will also suffer. Now, it's a crucial thing that we need to take action now to avoid exasperating this situation further. So, in conclusion, commercial real estate is facing a significant challenge with $1.5 trillion of loans coming due in the next 3 years. Refinancing these loans at current interest rates and values presents significant difficulties in this market with limited liquidity and transparency. So the private sector must be given the time and the space to invest the necessary equity to refinance these loans, and regional banks must be firmed up to prevent further collapse in this market. And failure to act, it's going to result in a public sector bailout, causing significant distress to the market and it wider across the entire economy. Now, remember, guys, my name is Rock Daniels. I am the Bluegrass Realtor for all your real estate needs right here in Central Kentucky. Be sure to take a second, hit that subscribe button so you and I can stay connected. Thank you so much for stopping by here today. I look forward to seeing you again. Have a great day.